Hello and welcome. My name is Jannels. I'm one of the directors of Impact Specialist Finance. Thank you for your time this afternoon. We're doing something a little bit different with the lender webinar this week, and in fact that we're actually going to do it on ourselves. And I'm delighted that I've got Kelly, who is our new business manager, to join us today. Hi, Kelly.
Hi, good afternoon, everybody.
Normally we would be doing this together, but obviously COVID restrictions are meaning that we are in different rooms in the offices. So we'll be shouting between the floors, and obviously we're live on the webinar as well. So what we'll do is we'll jointly go through how Impact can help you and your customers. And all I'll do is I'll share my screen. And we'll go through some various bits on how we can help you and your clients, and also then some sort of tips and things that we can do to help you moving forward, especially in these incredibly difficult times. So hopefully you can see the screen okay. Kelly, is that all right?
Yeah, that's all good.
Good, right. So for those of you who don't know us, we've been around since 1991. We are effectively a specialist packager distributor. We support all areas of the mortgage market, so buy-to-lets, adverse, lending into later life, and so on. And the majority of our guys, and Kelly being one of them, what's your background, Kelly?
Mortgage advisor, broker for 24 years prior to joining Impact.
With a rather large bank.
Yes.
So a lot of our guys have a good understanding of how the market works. We also have on-site underwriters in normal times. Obviously, at the moment, they're sitting at home. But what that means is that we do have a consistency of underwrites. So we speak to the same person each time, and we can obviously get a decent decision. And in some cases, we can get exceptions as well. So we've got about 30 staff. I also sit on the Association of Mortgage Intermediaries Advisory Industry Contact Group. What does that mean? It means that every couple of months we meet online at the moment with various people from various parts of the industry, networks, mortgage clubs, lenders, and so on. And we discuss the issues and the topics that are coming from the FCA or the industry, or even solicitors that might raise problems with us. So we've got a good idea of what's coming before it actually is installed into the marketplace. And then finally, we've also been invited a couple of times to go and talk to the FCA with regards to the packaging community and effectively a master broker forum, so they understand exactly what goes on in the specialist market. So that brings me on nicely to actually what is the specialist market? Well, really, that could be a lot of different things, but more recently, very much on the buy-to-let side. So we're seeing a lot of complex deals, HMOs, limited companies, people changing from personal names into limited companies, converting HMOs, multi-unit blocks, other things, and I'm sure Kelly will come on to that in a second. We've also got other bits such as complex deals. So maybe it's a transaction which needs a bit of added security from the lender's point of view. So we might bring another property into a cross-collateral charge, or we might put money into an account with the lender based on the client's name, just to give them that bit of added security. We're doing a lot of over 55s at the moment. Obviously, this is a market that's a huge entity. And the majority of our lenders on the right-hand side there don't actually have a maximum age limit. So anything over 55s is pretty straightforward. I think this one is probably one of the ones that we're going to see rapidly increase, unfortunately, especially with people being made redundant over the last how many months. And obviously when furlough ends again in March, we may see some more. So unfortunately, the adverse side of things is most definitely going to increase. But at the moment, a lot of our lenders do ignore some entities, the small defaults under £250 or £300, and also on the communication side, they ignore them as well. So have a chat with Kelly and the team to source an opportunity for that one. I'll talk about bridging commercial in a minute, but effectively what we do day to day is everything that the high street will not touch. So credit score fails, hidden adverse, and so on and so on. So that's how we can help you. The positives at the moment, realistically, obviously, our builders are building houses, and obviously since lockdown eased, we've got physical valuations. While those two are happening, that really does help us in the marketplace. We're doing a lot of help to buy stuff at the moment, especially on new builds, and we're doing a lot of new build properties across the board as well. We're seeing some higher LTVs come back, and lenders are talking to us all the time about what can we do, where are the gaps in the marketplace, how can we bring in more products, and Kelly will go through some of the exclusives that we've got in a second. And we've also got lenders who are looking for solutions. How can we help them fill the gaps in the marketplace? Where can they have a quick win? The big thing at the moment is obviously lenders have money to lend, and that's really, really good and positive. And of course, over the last day or so, we've seen the vaccine come out. So, you know, there is light at the end of the tunnel, but it's still a long way off as yet. So, Kelly, why use a packager?
Thanks, Dale. So, as Dale said at the beginning, I have been in your shoes, a mortgage broker advisor for 24 years before joining Impact. So I can only understand and empathise with having a tricky case on your desk, which you just don't know which way to turn. You haven't got time, particularly in the current market where lenders have changed their criteria. You don't know who's doing what their turnaround times are, or even where to start with the case. And that's where it's fantastic to have a packager on hand that you can simply ping an email, pick up the phone to, run the case past us with a fresh pair of eyes, just looking at another scenario around it. Often it gives us great pleasure to be able to place a case when a broker picks up the call and says, I don't think you're going to be able to go anywhere with this. That's where we really like the challenge, to be able to find a home for that case. And quite often we can, just by having a look at it in a different structure. Lenders are particularly tricky at the moment with some of their turnarounds, but we have dedicated on-site underwriters, not so much on-site at the moment, but they're still dedicated to us. So they will look at that through their eyes the whole way through and support us, quite often getting us exceptions, where if you were going direct to that lender yourself, you wouldn't be so lucky with getting that exception. We have a dedicated case manager for every case that comes into us. So they'll make sure that that case is watertight and perfect, so that when it's ready to submit to the lender, it's straight to offer for you, valuation and offer. We've got exclusives with certain lenders. We've got Bluestone, we're a part of their Sapphire range. So if you are 1 year out of bankruptcy, we can place it. If you're currently in an IVA, we can place it, particularly with the Help to Buy, new and old. We've got a 6 times income stretch product. If you are clean within the last 3 years and you've got a good employment history, we can get up to 6 times on an exclusive product with one of our lenders. We've got a great exclusive on expats with another lender, with lower fees, great 5-year fixed rate. So definitely worth picking up the phone, having a chat to us. We've also got great HMO exclusives as well at the moment.
That expat one also includes Australia, doesn't it, if I remember rightly?
It also includes Australia, whereas if you went direct to that lender, you wouldn't actually have access to the Australia on there as well, which is a big one. Expat's been quite big at the moment. Holiday let's been big as well. I think Dale's going to touch on buy-to-lets with you, but sort of heads up is most lenders want experience. We have got a lender where they don't need experience, so a first-time buyer looking to purchase a holiday let, we can assist with.
Cool. And also just remember that we're on the same side here, so we're trying to make this case go through the system as quickly as possible, and until that case completes, we also then get paid. So it's in our interest to make this a team effort to get the case done as quickly as we possibly can.
Yeah, there's no charges up front for us sourcing for you. We use 27 Tech for our sourcing, as well as what we have a knowledge board, which is updated regularly by ourselves, by lenders, so we know exactly what that lender is offering and when, exclusive products, great rates, and quirky criteria. So adverse in particular, as Dale touched on, is going to be, we predict a tricky situation going forward. We do have lenders now where we can have up to 2 missed payments on a mortgage in the last 12 months and are ignoring unsecured arrears if they're brought up to date as well. So there are some great USPs with some of our lenders, which some brokers just aren't aware of, but by simply picking up the phone to us, we can look at another option for them.
That's a good point. So moving on to the residential side, there's a number of areas that we can help with. Kelly, do you want to go through this?
Yeah, so credit scoring, all of our lenders do soft searches. So it's not going to have an impact on your client's credit file. They're also doing manual assessments. Over 65s, over 55 properties as well, we can place those. So lending into retirement's not an issue with us. 1 year's accounts, We've still got lenders that are taking 1 year's accounts, as long as they can evidence that through COVID, they have still been trading and earning an income. Expat residential, I touched on this a moment ago. We've got a few lenders that will do expat residential. And again, we've got those exclusive rates as well. Contract workers, including CIS as well, plus with the contract workers, they don't need to have a certain amount of time left on the contract or been in that contract for a certain amount of time. So we can do sort of day one on there for you. Right to buy, shared ownership and help to buys. We have got lenders for all of these options at the moment, particularly with our exclusive with Bluestone on our Sapphire range. That will be ongoing with the new help to buy being launched soon as well. Interest only, we've got lenders that will stress on an interest only. So not on a capital repayment basis, which can really help with affordability in this tricky time. But that's restricted to 60% loan to value, but we can obviously get a higher level of income for your clients on that if they are looking for interest only, and that can be with sale of property.
Nice one, thank you. I forgot to mention that at the bottom of your screens there is a Q&A button if you wanted to ask Kelly or myself a question during the presentation. Obviously we are live, so we'd quite happily answer that for you. Okay, so moving on to the buy-to-let side, what we can offer, very much up to 80% loan to value at the moment. Obviously pre-COVID that was 85, and we did have a few people play with 85% after the lockdown was relaxed a little bit, but that's now back to 80% loan to value maximum. We can look at first-time buyers and first-time landlords. As Kelly mentioned earlier, a lot of our stuff now is non-credit scoring, so very much a manual assessment, as well as having the credit scoring options in the background. But I would say probably the biggest part of the business at the moment is the HMO conversion, so converting a 3-bedroom property into maybe a 5-bedroom HMO, and also probably putting it into a limited company name as well. It tends to be a very big part of the business. I would suggest that even 90% of all of our buy-to-lets at the moment are coming in on a limited company name basis. So we can see that the tax changes and things are really taking an impact on a landlord's vision. There are no minimum trading periods, no minimum income on some of them. We are having quite a few refurbishments where people are buying dilapidated properties. It may well be that during lockdown they decided actually we need to refurbish an area of the property or even a whole buy-to-let. And it might not be rentable in the current climates. So what they do is they would do a 3 to 6 month short-term loan and then convert it back onto a term loan at the end. Normally we can do that with the same lender from start to finish. We can look at under 30 square meters. We're most definitely looking at holiday lets at the moment and some Airbnbs. Rental calculations will depend on the lender, but again, we could do these at pay rates over 5-year terms, and it could be 125% or 145%, depending on whether it's a limited company name, lower rate taxpayer or high rate taxpayer. Other bits on there, near prime, we've got a case study in a second, which we'll talk to you about near prime, but most definitely tenants aren't paying all the bills, and some of these are registered against the landlords, and it becomes a bit of a shock when they go to refinance and find that a bill hasn't been paid and it's registered against their name. Or they've bought the property in cash and want to remortgage out on day one. Again, another scenario where it is a very, very, everything is a contract race at the moment, with estate agents maybe selling properties to 3 or 4 people at the same time, and finding out who is getting the offer quickest will then get that property. And then complex at the bottom there. If you think it's a deal that should be done, then I would suggest that it's absolutely worth putting it to Kelly and the team, giving us all the reasons as to why that deal should be done, and we can put it to our lenders who think outside the box and see what we can come up with. Anything to add on that, Kelly?
Yeah, we're getting a few at the moment where portfolio landlords in the background. We've got a couple of lenders that don't stress the portfolio in the background, which is really, really useful in the current climate in particular. So yeah, so give us a call on that one. But otherwise, no, I think we've pretty much covered those off, Dale.
Brilliant, okay. So then moving on very quickly to the bridging side. So bridging, again, very much on the ascendancy at the moment. The recent figures from the ASTL show that the third quarter has been a record for the number of bridging loans that are going on. I think it was about 7 billion, I think, in applications. But where we're seeing the most at the moment is with chain breaks. So people have got to the chain, it's all ready to complete, and right at the last minute, someone unfortunately loses their job, they pull out the purchase, and therefore the chain could collapse. Therefore, we would look at a short-term entity to top up or prop up the property chain on a short-term basis while that property resells but also at the same time it allows the existing chain to complete. So chain break finance probably is our biggest one. We've seen a lot of buy-to-lets, refurbishment loans, like I said just a minute ago. There's a few development finance where development finance companies through COVID have not carried on, and therefore they need their loans being repaid. So we have bridged out development finance on that basis. And there's a lot of people at the moment talking about the stamp duty land tax deadline in March. Is it the right thing to do? We'd have to look at on a customer by customer basis, because actually, although bridging does start as low as 0.43%, there are 1% fees in, and therefore, depending on the property, it may well be cost effective to not complete in time for the stamp duty. It just depends on the customer on a customer by customer basis. So a couple of case studies. This one here, the client was actually searched 14 times before the broker brought it to us from another broker. But what they missed was actually there was a linked address on a buy-to-let where there was some adverse. We got it resolved pretty quickly, enabling the client to remortgage, raise money to buy new residential, but also transferred that buy-to-let from a residential consent to let basis into an actual proper buy-to-let. We raised them about £40,000 to buy their new property on the residential basis, but also worked out being £100 a month cheaper for the client. So it was a really good end result. Plus it ensured they had no issues in the future as well. So it's all about working together to make sure that we can get the client the right deal. This one here was 9 properties that were built, but they couldn't be sold at a decent price in the current climates. Therefore, the developer loan was being recalled. I think it was about 12.5%. But also the limited company set up to do the project was running at a loss, because they took all the money in the build costs out of the company, and then they refinanced it at the end and took out any profit once the properties had been sold. But of course, the properties couldn't be sold. And we had a shareholder from abroad as well, just to add in a little bit more confusion in that one. But we managed to refinance the whole block onto buy-to-lets, allowing the developers a bit more time to sell the properties and rent them out in the meantime. This one here was a farm which had exchanged on a bit of extra land. They needed to refinance the debt on the main house because the debt was actually a bridging loan, and during COVID, the bridging company wouldn't refinance it, wouldn't recalculate it, and therefore monthly payments had started rather than normal interest roll-up. And even though the lender said no to the broker directly, we managed to give them the whole scenario and give them a reason why to do the deal, and it went through a pretty good rate of about 4% and saved them against their 12.5% refinance. And then finally, we've got a barn conversion, structurally sound entity. We had a complete heavy refurbishment that was done on PDR basis. Normally, about 75% of the overall funds can be raised, but on this one, because we had additional security in the background, we did a whole 100% fund on this one. Sorry, there's one more, interest only. We did £1 million interest only on a new build flat for some elderly clients. And it was on a development that had restrictions to borrowers over 55. So again, even if they do have restrictions on there are some lenders that will think outside the box, especially the smaller building societies, who are quite happy to look at the whole picture, and especially when it's 50% loan to value as well on a nice property on the Thames. What we can also do is we can actually refer, if it's not something that you're certified in or qualified in, or happy to deal with. So that could be bridging, that could be adverse, that could be complex. Those are the sort of things that we're happy to help you out with. We'll speak to the client directly and then pay a proc fee on submission, on completion on that basis as well. Kelly, we've seen a few of those at the moment.
We have had a few, yes, mostly in cases where brokers have been fortunate enough to be able to be jetting off on holiday somewhere. But they simply haven't had time to deal with the client, but it's really pressing. So we have done it on an introduced basis and then split the prop fee.
Excellent.
Completion.
Cool. And then on a day-to-day basis, what we'll do is we'll send out updates. So we do quite a lot of these interviews, especially with regards to lenders. And in the current climates, what sort of service levels like, Kelly?
We've got some which are ridiculous, which we're trying to avoid, but we will always set expectations with you with a case. If a lender is running behind, but it's like the only lender we can go to, we'll just make sure that yourself and your client is fully aware of that before going. We've got other lenders though that we've been using throughout COVID and prior to COVID. which are outstanding. Their services stayed spot on. They're getting cases. We've had one from the case coming into us on our desk, then completing 10 days later. So, and that was a purchase as well. So it can be done. But yes, we'll always keep your expectations as to where lenders are at and how they're working to.
So we will certainly quiz the lenders on these interviews with regards to their service standards, and are they keeping all of us up to date and correct at the right time? Because we don't mind someone being behind, as long as if it was 10 days, for example, on the 10th day we got an answer. We can't, on the 10th day, they can't then extend it another 5 days. And those are the sort of things that we really fight the lenders on and challenge them on your behalf.
The lenders are working over, sorry now. The lenders are working overtime as well at the moment. And I think, Dale, you had an underwriter email you at 11 o'clock at night one evening, which does give you confidence in the industry that they are doing everything they can to get these cases through.
Absolutely. And so some of these interviews we'll publish out and we'll send out emails on a weekly basis just to give you an update. But we also do not just lenders. So here, for example, we've also done TWM solicitors. So we get the solicitor's point of view. How do we help complete cases quicker? You know, what are they looking at? There's a lot of fraudulent stuff in the market at the moment. What sort of hints and tips could Julian give us? So well worth having a conversation, or well worth logging onto the Impact website and downloading and just taking 20 minutes out of your time just to listen to some of these lenders and third-party interviews, because they're very, very worthwhile. With regards to systems, very, very quickly, give you an idea of how we work. We'll have a portal that you'll log on to and send us a DIP, and that DIP is effectively one DIP for about 28 different lenders on our panel, and that's how we work. We'll do a credit search. We're testing at the moment open banking and affordability models that we're going to release out into the market shortly. But we are live with Knowledge Bank, Iris, and 27 Tech. And once you've hit the submit on the DIP button to us, all of those are unlocked on the DIP system within the Impact portal. We also do have, if you fancied it, if you wanted it, the option to then link straight into our pipeline to do protection quotes and life quotes if it's not something you do already. Again, this is only from one rekey, and you insure for the general insurance side. If you wanted to, you can do a home track AVM. I think it's a £5 charge to get just an understanding of what your client's value of the property is before you even start submitting it to any lenders. Some of the lenders that we link in internally to include Oplo, Shawbrook, Equifinance, UTB, and Foundation are probably our latest ones. But we're also linked in with Mortgage Apply and Lender Connect. So when they bring on lenders, the system will also link in with them as well. So what we're trying to do is make sure it's just one key for all the lenders on the Impact panel. And that also means that, you know, we make it really, really simple and straightforward. You have a list of all your cases. If Kelly and the team request proof of income, proof of ID, or anything like that, you can simply drag and drop it onto the system, and we will pick it up this end. So there's no emails going backwards and forwards. If you put it through the system, it's all Microsoft certified. And as you can see up the top here, we've got 114 emails. So those are the 114 that have just been submitted, things that I need to deal with. We have a notes page where you can update notes for us and vice versa. And then once you've hit the DIP button, you'll get access to the sourcing system, which includes true cost, all the details that you'll need, KFIs, evidence of research, and all the lenders on our panel. We also then upload into the full data capture forms and application forms from all the lenders on our panel. So literally you'd hit generate documents and it would generate the document for you. And just for just for knowledge really, we work on stages and tasks. And in each case there might be 10, or each case there might be 10 stages, and in each stage there might be 10 tasks. You can't get onto the next stage until you've done the 10 tasks and so on and so on. So we're creating a full audit trail and compliant entity on every single case that comes in the building. Anything to add on that, Kelly?
No, just when you do upload documents or you send us a message, it's not waiting for us to then go back into your case to see if you've added the documents. The system notifies us. It's very clever. So the minute documents are uploaded, we go straight into that case. We are prompted by the system, so it doesn't go into a black hole.
Absolutely, good point. So we deal with all DAs, but we also deal with a lot of ARs as well. So we're an approved packager for all of these entities on here. So if you're part of them, you can use us. If you're a DA, you can use us. And Kelly, prop fee wise, what do we pay out?
For an example, if a lender's paying us 0.9, we'll pay you 0.5 on completion of that. Like I said earlier, you only pay a fee, and that will be our packager fee, which 90% of the time is £99. It does vary on loan size and some lenders, but that's not payable until your client actually wants to proceed to full application.
Excellent. So that really is our presentation over. I think we've covered most of the questions in that entity, but the real clear things to take away from today is, like Kelly said, we're from £99 on application. We've got mortgages for the over 55s. Obviously, we've got a really hot CRM system that does a bit of everything, and it's all GDPR compliant. We can refer cases, and obviously we've got lender underwriters as well, which gives us a little bit of an edge on some of our competitors when they just purely deal with our cases. To see what people say, you only need to have a look at our Trustpilot, which we are rated as excellent, and these are some of the comments that have been made just recently by some people who have dealt with us and Kelly and the team and so on. And if you wanted a Zoom with us, that is not a problem. We are quite happy to have a one-to-one session with regards to training and so on. And Kelly, you haven't mentioned the wall of questions.
Oh, yeah. We have a fantastic knowledge board, which, or brain board, as we like to call it in the team, which does act like our brain. Things change in this industry by the second. It's not daily, it is by the second. And so when you give us a call, we're literally looking at that board, knowing where we're going to go to as a first point, as well as having our sourcing systems as well. But the brain board is updated regularly by all of our lenders that we work closely with, and ourselves. And yes, so we know exactly, while we're having that conversation to you, where we're going to start with sourcing for your tricky case.
So normal times, we've got the brain board, as you call it, and then we've got the on-site underwriters in-house as well. So it's a quick shout across the room or a look at the board, and we've got a good idea of what's going to happen with that case.
Yeah.
Brilliant. Okay, that's just about our time. It's flown by, Kelly. Really good. Really insightful. For everyone that's watching, thank you very much. Our contact details are on here. If you phone the number 01403 272625, you'll speak to Kelly or one of the other team who can help you with your inquiries, or by all means send us an email on the website or tweet us on the Impact Mortgages side as well. So thank you very much for your time. We have recorded this, so we will send it out in an email shortly, but in the meantime, keep well and stay safe.